All right. Good afternoon, everyone. I'm Brittany Gallo with the Farmers Market Federation of New York. I'm here with Diane Egger, our executive director. Today's meetup will be discussing insurance issues for farmers markets. Our guest speaker is Larry Spilker from Campbell Risk Management. This agency, and Larry in particular, sponsors a nationwide farmers market insurance program for farmers markets and farmers. Larry has an exceptional knowledge of all things market insurance related and will share his knowledge with us today. At the end, we'll open up the meeting to some questions and answers. Larry welcomes your questions and hopes that you will all take the opportunity to ask those questions so that we can all learn from them. At that time, you can unmute yourself and ask your question so that everyone can hear both the question and the answer. And I will now turn it over to Larry.
Good afternoon, everybody. Thank you for joining. I'm going to click on the share screen here and get this up here so you can see it. All right. So my name is Larry Spilker. I'm with Campbell Risk Management, and we've been administering a program nationally for farmers markets as well as vendors for insurance for going on our 13th year now. And we were fell into this opportunity when we were meeting with Extension Office of the Department of Agriculture in Ohio, and they were starting to put together a farmers market association there, and asked if we could cover farmers markets and vendors, and we took that challenge, and with the help of state associations and the Farmers Market Coalition, we were able to put together an insurance program that has served the farmers market and vendor space across the country quite well, and has been a benefit for many across the country. Being able to provide affordable insurance solutions for both markets as well as vendors around the country. And it works because of the participation of markets and vendors across the country. The more that participate in the insurance pool, as you say, is what makes it so that the rates are affordable. We have to file with each state and have the state insurance commissioner approve an insurance program in order for it to be admitted in the state. And so we are admitted in the state of New York, which means the advantage of having an admitted insurance product versus a non-admitted insurance product is that if the company for any reason were to go insolvent, it's guaranteed by the state through the guarantor's pool there for insurance that the policy remains in force and that the claims are paid. If you're purchasing insurance through a non-admitted source in the state, if they go belly up, there's no real recourse there. There's no backing behind it as far as the state goes. So we were very excited to be admitted in the state of New York, so that anybody that participates in the program can have assurance that the insurance company and the insurance that they're purchasing is actually legit and stays in place. So that being said, let's talk insurance, how to navigate insurance for markets and vendors in today's times. So there's two different types of insurance exposures that exist. The market has their own inherent exposures for operating the market itself. So a market will get their own policy to cover the market for its own risks that it has. For example, you put out a sign that says market open today from 8 until noon, and it blows away and damages somebody's car or injures someone. You set up a welcome tent or table, and something falls off the table and somebody slips and falls on it. Somebody slips and falls and injures themselves in one of the common areas of the market and is injured. Doesn't have anything to do with a vendor's booth or vendor space, and they turn around and sue the market for that. Those kinds of risks that would cause injury to another person or damage to another person's property because of the market itself's operation is covered under the market's policy. The question's been asked, who's covered under the market's policy? Your employees, your volunteers, their actions are covered. So if the market manager was the one that stuck the sign in the ground that blew away and injured someone, and they were to be sued because of that, they would be covered under the market's policy, because that type of thing is covered under the market's policy itself. So if a employee or volunteer, somebody working at the direction of the market, were to do something that would then cause injury or damage to somebody's property because of the market itself's operation or the setup of the market that they were involved in, those kinds of things are covered, or that particular individual is covered under the policy for personal liability from they themselves being sued. That also extends to the board, the market board. If there's a coverable claim under the market's policy for the market's operation and the market's exposure, the board itself is covered from personal liability for something that is covered under the market's policy. So one other exposure that markets have that aren't related to the general liability portion, which is, again, injury to another person or damage to another person's property because of the market's operation. There's a different type of policy out there for board of directors. It's called directors and officers insurance. That's available to boards should they choose to get that type of coverage. And that covers the board itself for decisions that the board makes. So for example, let's say you have a vendor that applies to be at your market, and they sell salsa, and you already have 5 salsa vendors and you don't need a 6th salsa vendor. So the board decides, we're not going to allow this vendor into the market because we already have too many salsa vendors. But that vendor then turns around and sues the board and says, you're discriminating against me. You're not allowing me into the market, not because I'm a salsa vendor, but because of my race or religion. And they sue the board. That time, they weren't physically injured and their property wasn't damaged, but they feel that they were damaged because of a decision that the board made. So that wouldn't be covered under a general liability policy. That would need to be covered under a directors and officers policy. So if the board feels that they want that type of coverage, they would get that as a separate policy to the general liability. So the general liability policy that the market has doesn't cover the vendors' operations, the vendors' products that the vendors are selling. Once a vendor gets a space from the market, that space becomes the vendor's responsibility. Anything that happens within that space or because of that space or because of a product that is sold from that space, the liability falls to the vendor. I try to use an analogy of think of yourselves as market managers as kind of like operating a mall. If you look at it from a macro standpoint. So you get a mall and they lease space to the Gap and to JCPenney's and so forth. the market has its own, or the mall has its own common areas and walk areas and parking lot and so forth. And if somebody's injured within those common spaces, the mall's policy covers that. But once somebody steps inside of a store, and if they were to be injured in aisle 5 of that store, that wouldn't fall on the mall, that would fall on the store that had leased that space. So vendors should be getting their own insurance. The program that we administer, the underwriting insurance company makes that a requirement, that markets require all vendors or those participating within the market to have their own insurance. And not only have their own insurance, but to list the market as an additional insured. So when a vendor gets their space, they get their own insurance and they list the market as an additional insured. What that means is that as an additional insured third party, you're covered in the event that you get sued because of something that they did. So again, when you're looking at a mall type situation, the Gap is going to be required to have insurance, provide a certificate of insurance listing the mall as an additional insured. So when somebody slips in aisle 5 of the Gap and injures themselves, the attorneys normally sue everybody. Well, in the case of markets, it's happened 100% of the time. Every time a vendor gets sued, the market gets named in that lawsuit additionally. So having that protection for the market by listing, the vendors listing the market as an additional insured and providing that certificate of insurance, you're covered as a third party for those types of exposures that would stem from a market or a vendor incident, from a vendor incident. Most of the claims that come through, and when I say most of the claims, I'm talking 99% of the claims that come through are operationally related. It does not have anything to do with what a vendor is selling. They could be selling crocheted items, birdhouses, pies, salsa, fresh vegetables. Most of the claims that we've seen over the last 13 years are all operationally related. Somebody trips over a tablecloth, there's something sticking out from a vendor's table that somebody trips over and injures themselves. We have several canopies that blow away. No matter how much weight you put in the corner of those tents, there's always that one wind that just hits it just right or just hard enough and will lift those tents up and carry them across, and they end up damaging vehicles, or in many cases, unfortunately, have caused injury to someone. And those kinds of things can occur whether they're there for a day, whether they're there for 5 hours. We've had vendors that have, their first day out at the market, 15 minutes after it opened, boom, there was a claim involving that vendor. So it doesn't discriminate as to how long they're there for, whether they're just there for a day or they're there all season long. If that happens to be the day when something happens and that vendor's involved in it, if they don't have insurance, it can ruin their lives. It's some of the claims that pay out are north of $150,000, $200,000 for physical injury to someone because of a canopy or because of a slip and fall, or somebody runs an extension cord across to run a fan in their tent. And so whether they're selling anything or they're whether they're making $5 or $500,000, insurance is a necessary evil, if you call it that, for vendors that are going to be participating in the market. So that that's kind of what, so kind of the difference between what the market policy covers is its exposure, and then the vendors cover themselves for their exposures. Product liability is important with a vendor policy. If they're selling products of any kind, that in the event somebody claimed they got sick or injured in some way because of what they purchased from that vendor, you want to make sure that that is covered as well. It could be, a candle, a lot of candle makers. Somebody makes a candle and the wick burns out the side of the candle and burns down somebody's, $500,000 house. And they turn around and sue, the folks that made that candle that they bought at the farmer's market. Or it could be a food item where they claim they got a foodborne illness or got sick in some way because of what they purchased from the vendor. So having those kinds of that kind of insurance in place is a good thing. I get asked a question quite often about hold harmless agreements, and where the market manager says, well, in my book or in my policies and procedures, we have a hold harmless statement that the vendors sign off on that says they agree to hold us harmless in the event something happens. Does that take the place of the insurance? The answer to that is no. The agreement between the two parties is an agreement between the market and the person that signed that agreement agreeing to hold harmless. So if a patron is injured at the market because of something that a vendor did or something that a vendor sold, they didn't sign a hold harmless agreement. It ended up so that they'll turn around and sue the market, they'll sue the vendor, and that hold harmless agreement, even though you can take that into court, say the vendor agreed to hold us harmless, the party that was actually injured did not sign that. You could litigate that and try to sue the vendor for any losses that the market incurred because of that loss. But a lot of times that ends up going nowhere and just is a very costly thing. So you can just get rid of those types of issues by just making sure that all the vendors have proper insurance, that you're listed as an additional insured, and you'll be good to go. Now, what the vendor's doing, what the vendor's selling, it doesn't matter as long as they have insurance and list the market as an additional insured. Okay, so if you want to have somebody there that is has a petting zoo, or they're providing pony rides, those kinds of things. As long as they have insurance for that type of activity, and they can provide you with a certificate of insurance listing you as an additional insured, and you want to have that type of activity going on at your marketplace, then that's fine. We get asked too about musicians that may be wanting to participate in the market. If you're paying somebody to be there, they're as a musician, they're a professional, and as a professional, because they're receiving money, the way the courts look at it is, if they're doing that for a profit, or you're getting paid to do it, you're a professional and you're liable for anything that occurs. If you've got a market participant that wants to play and they're not being paid anything, a stipend or anything like that, they're not receiving tips, so they're not profiting at all from it, then that could be considered just part of the market activity or market ambiance, and that type of thing could be covered under the market's policy. But as soon as any kind of payment changes hands, or they do this where they're receiving compensation for doing it, then all of a sudden they become liable. Market or the courts follow the money. So anytime there's any kind of money involved, the courts look at it completely different. vendors sometimes will have excess, say, produce, and they will give that produce away to a food hub or to a food bank. And that kind of thing. If you're giving something away, you're protected under the Good Samaritan Act, and you're not liable for something that you donate to a food bank. But if you sell it, all of a sudden, now that liability then falls on you again. So anyway, just an off example. All right. Like I said, slips and falls are the most common things that you're going to find that occur at the markets. That's generally where most of the claims come from. One of the questions that we get quite often is certificates of insurance. What needs to be on the certificate of insurance? How do I know that I'm an additional insured? If as a market, when you require your vendors to provide you with that certificate of insurance. So kind of put this together for you so that you can take a look at what a properly put together certificate of insurance should look like. So just real quick, I'll kind of go over this with you. At the top, this is where it just says insured, and that should list the name of whatever entity or individual is actually taking that space and signing off for that particular space that they're going to have. That would be the named insured on the policy. That's the owner of the policy. You should have their name and mailing address there. And that just make sure that matches up with who's actually leasing the space, and that it's not some other entity that they're giving you a certificate of insurance for. It's a commercial general liability policy. The middle of the page here shows that that they have a policy number. We've looked at certificates that don't have a policy number. They don't have an effective or expiration date, which is next to that. You want to make sure that these spaces are filled in with a policy number and with an effective and expiration date, and just make sure when you're looking at that expiration date that you're not getting a certificate that expired in 2020 or in 2019. Also, we've run across some vendors that try to get a little creative. If the type or the font looks different on the expiration date than the rest of the font on the certificate of insurance, the chances are that may have been modified to actually say that they have insurance that's in force. So just take a look at them, just make sure that the font matches up. If somebody does that, it is considered insurance fraud. And if the claim happens, they've got a lot more issues than just the claim for committing insurance fraud. But the limits of insurance are shown next to it. Across the country, the minimum that most markets require is $1 million per occurrence with a $2 million aggregate limit. What that means is the most that this policy, $1 million policy, will pay per incident or per occurrence is $1 million. It's the maximum it'll pay out. The aggregate limit, or general aggregate limit, is normally twice what the occurrence limit is. And that's the most that the policy would pay out for any one particular policy year. So $1 million per occurrence with a $2 million aggregate limit, you could actually have two separate $1 million claims pay out before the policy limit was exhausted for the year. Or you could have any combination of that. You could have $400,000 or $500,000 policies, or $400,000 or $500,000 claims pay out, or $2,100,000 claims pay out before the policy limit was exhausted for that year. The damage to premises limit, right underneath the occurrence limit, what that is, that's a fire limit. That is for any one fire. So that's the most that the insurance would pay out for any one fire that particular vendor or person, the insured person themselves, caused for damaging the premises. Outside of a fire, it's the policy limit for property damage. So if their tent blows away and totals somebody's Lamborghini, it's $250,000. That would actually, it's damage to somebody else's property. That would cover up to the policy limit. Medical expense, I get asked this quite often. You'll see a medical expense limit. That is that $5,000. That is the most that the insurance company will pay just to reimburse somebody for medical expenses. And it's a very streamlined claims process. It doesn't go through as much claims adjusting as a larger medical claim. So say, for example, somebody was injured, they had to go to the med check, they had a $700 bill from med check, they turned in that $700 bill and said, you know what, all I want you to do is cover my medical expenses. It would cover that under that $5,000 payout. It still covers medical expenses over $5,000. It covers them all the way up to the policy limit. It just goes through a different process of adjusting. So if somebody had $150,000 worth of medical expenses that they were claiming, it would still pay up to the policy limit. It just goes through a different process of adjusting that claim, and more scrutiny involved there. So that's this bottom limit here where it says products and completed operations aggregate limit. That shows that they have product liability. So when you're looking at this and you're making sure that they have liability insurance for the products that they're selling, you want to make sure that there's an actual limit there, and that it is not specifically, it's not blank, or a lot of times I've seen certificates where it says, just types out the word excluded. Normally, if products are excluded, there's a reason for it. That's kind of a red flag. So if you get a certificate of insurance and the insurance company has excluded products, there's a reason for that. They're concerned about the products that particular vendor might be selling. So having a limit there and checking for that, just make sure that they've got coverage in the event that somebody were to claim they were injured in some way because of what they bought from that particular vendor. Market policies, you'll see a products a limit on there as well. That product on a market policy does not extend to the products that all the vendors are selling. That would be if the market itself were to offer, like products that were a t-shirt that said, had the name of the market, or coffee mugs, or things like that the market itself sold related to the market, promotional items, that sort of thing. Okay. As you move down on the insurance certificate, this is the heart of it. Once you make sure that the policy is actually in place and it's legitimate and they've got the limits that you need. When you get down here to the bottom, the two boxes down at the bottom, one is a description of operations, and the other one says certificate holder. This gets to be confusing for a lot of markets that are out there. They just end up with a certificate of insurance that has the market's name and mailing address listed in the certificate holder box. That makes you a certificate holder. That does not make you an additional insured. As a certificate holder, what that tells you is that the insurance company is going to endeavor to notify you in the event that the vendor that's providing you this certificate of insurance cancels their policy midterm, or buys an insurance policy, gets a certificate of insurance, gives you the certificate, and then calls the insurance company and cancels their policy the next day. So you've got a certificate there, you think he's covered, you think you're covered, and then something happens and you find out that that insurance policy was canceled. So as a certificate holder, you can receive notification that the policy has been canceled and is no longer in force and that the certificate's no longer valid. But that's all you get as a certificate holder. So in order to be an additional insured, the description box up above kind of is where you're going to see that. Now, there's a few ways that this can be done. So I've listed 3 examples of what you could have in that description box. There's a few companies out there, ourselves and Flip, the Flip program, they have a blanket additional insured. We have a blanket additional insured endorsement. What that blanket additional insured endorsement and that statement up above means, where blanket additional insured applies, what that means is that where it is required in some sort of written agreement or contract, that person is required to have insurance and list you as an additional insured, that blanket automatically kicks in. It covers you as an additional insured because you have requested that from them in writing. So as part of your market and vendor procedures and policies, that's in there when the vendor signs off on that they agree to, the conditions of the market and the vendor procedures and policies, and it states in there that you're required to be listed as an additional insured, that blanket automatically kicks in and you're covered. The other way to do that is to have a statement in that description box that just simply states the certificate holder is hereby an additional insured. You look down, you see your name and mailing address in the certificate holder box. The statement up above stating that the certificate holder is an additional insured makes you an additional insured. The other way is just to specifically name it in that box that says, XYZ Farmers Market is an additional insured. So those are the 3 things that you want to look for. You just want to make sure that this description box isn't just left blank with nothing there and all you see is just your name and address in the certificate holder box and put it off in the file and move on. If you get drug into a lawsuit over it, it's not going to hold and cover you as an additional insured if you're just the certificate holder. So anyway, that this is being recorded, so I believe this will be available to you. I can send this to you individually if you need as well. That is kind of a helpful tool to look at. We provide a service through here, Campbell Risk as well. When a market buys a policy, they are agreeing in that application for insurance as a market that they require all of their vendors to have insurance and list the market as an additional insured. And in your online account, there's actually a place where you can click and upload your insurance certificates to Campbell Risk Management, and we can very quickly take a look at those insurance certificates, make sure that they're valid, make sure that they're, that it's not expired, that the limits are where they're supposed to be, and that you're actually listed as an additional insured. If you upload certificates to us or you email me the certificates to look at, if you have a question about them or you're not sure, I can take a look at them. Normally, when you upload certificates, if there's nothing wrong with them and everything's fine, you're not going to get a response back. You're not going to get a response back that says, this one looks okay, this one looks okay, this one looks okay. You'll get a response back if there's something that needs to be fixed or adjusted. Hey, we got this from you. You're not an additional insured, or we got this certificate from you. The policy expired 2 years ago. You need to address this with the vendor, that sort of thing. So if you're not comfortable with looking at certificates, or you're not sure about something, you can always send them over to us. We'll be happy to take a quick look at it to make sure that everything's good there. Sometimes also the town or the landowner may request also that they are an additional insured on all of the vendors' certificates. So you can have the insurance company or provide that in your vendor policies and procedures that not only the market is an additional insured, but the town is an additional insured, or the city, or whoever is mandating that. Just make sure you have that in your policies and procedures so that then that can be put in as well. You can put in yourself as the certificate holder, and then in the description box, it could state XYZ Farmers Market and the town of so-and-so is an additional insured. So you can have those additional insureds listed in that description box. The certificate holder is the only one that would get notified in the event of cancellation. But if you have that in that box up above, that these other folks are additional insureds as well, that takes care of that requirement and satisfies some of the requirements that the town may have as well. So I know it's a lot of information, but it's here, and I'm available to answer any questions that you might have related to the insurance certificates that you'll need to get. Common terms of a policy. We went over the aggregate limit. Deductible is normally just related to property insurance. So that for liability insurance, deductibles don't apply. The policy pays out from $1. It covers the cost of defense, whether you're found to be at fault or not. You don't have any out-of-pocket expense. If you're buying a policy that covers equipment and so forth, then you're going to have a deductible that's involved with that. Most commercial deductibles are about $1,000 deductible, so you'd have to have $1,000 loss before the insurance company would pay anything. If your canopy blew away and injured someone or damaged somebody's car, it would fix their car. And if you had your tent covered with property coverage and paid additional to cover that, and it was a $600 tent, it wouldn't pay anything because you had $1,000 deductible, if that makes sense. Most vendors and folks don't carry property insurance just because they don't have enough property to justify the additional cost and the deductible as well to even justify paying for it. So I think we kind of went over most of, we've gone over all of these things except for rider, it looks like. One of the things that we get, I asked about, and that do I have to buy just a policy by itself, a standalone policy to cover me as a vendor? This is normally relates to a vendor. So they could get a rider on their farm policy, they could get a commercial rider on their homeowner's policy, and that would cover them for off-site operations at the farmer's market, as long as they provide you with a certificate of insurance listing you as an additional insured. It doesn't matter, whether they get this as a rider on their farm policy or a rider on their homeowner's policy, or they buy a standalone policy. That's what most people do. Most homeowners policies they might extend to a home-based business, which would only cover them at their home, but it's not going to cover them off premises to go set up at a farmer's market. But as long as they provide you with that certificate of insurance, it doesn't matter where they get their insurance from or who that's through. Some of the vendors have businesses, they have brick and mortar stores, they've got policies there that will cover them off premises. As long as they're providing you a certificate of insurance listing you as an additional insured, then that is absolutely fine and acceptable. So that ends my part of the actual just running through presentation here. Like to open that up to any questions that you might have. So I'll turn it back over to the facilitator.
All right, thank you, Larry. If anyone has any questions, feel free to unmute yourself and ask or put them in the chat pod.
Hi, this is Katie Plum. Can you hear me?
Yes.
Hi, Larry. I'm so happy you use your insurance. I was wondering, I think you mentioned it a little bit when you said about with music came and they didn't exchange hand, because we have people wanting to come to the market with a table, wellness kind of educational sources. You know, they're not going to pay and to market anything, and they're just going to give out some pamphlets or whatever. And I was wondering if we had to ask them to get an insurance policy.
Yeah, unfortunately, just the exposure of being there in a public environment. And I'll give you an example. This is a real life claim that just got turned in. There was a volunteer group that was there doing exactly what you're talking about. All they were doing was handing out informational literature, and they had a table and some brochures on it, and they were sitting behind the table, and they had brought a cooler, and they had drinks in the cooler because it was hot out, and the lid to the cooler blew off in a wind, and it hit a child in the face and broke their nose. Now the child has a deviated septum, and so and they weren't doing anything but handing out literature, but yet now they're in the midst of a lawsuit. So if somebody's going to be there in an operational capacity, and they're actually physically going to be there, and they're going to set up a table, and they're going to do that type of thing, having insurance is a definite need. I've had some markets that have set up themselves a community table and say, you know what, if you're going to be at the market, physically be here and set up a space and physically be here and talk to people and hand out information and that sort of thing, you need to have insurance. If you like, though, markets could set up like a community table, and you could take those brochures that they want to hand out and have available and set those out yourself as a market and have that as just a market activity for community service, that sort of thing, that's being operated by the market itself, but not by a third party. Does that make sense?
Yes. Okay. I understand that. Yes. Okay, so I'll just have to tell them, because we require the village, because the landowner has to be indemnified. Myself personally, someone told me that was important, as well as the market. So we asked the vendors for those 3 different pieces of insurance, indemnifications.
Sure. Yeah. So having that insurance and providing that certificate of insurance, listing, whoever you feel is at risk and needs to be listed as a third party, as an additional insured, is invaluable when something does happen, because the attorneys are going to sue everybody.
Right. Thank you very much, Larry. I appreciate it.
Hi, Larry. Carol here from Down to Earth Markets.
Hey.
Hi. Just wanted to start by saying it's a joy to work with you and Tina. I work with Tina almost on a weekly basis, and you guys are great. So thank you so much.
Yes, absolutely.
My question is, you talked a little bit about admitted New York State insurance providers. I'm just wondering, what's the best way to validate that an insurance provider is admitted? We work with a few, as well as obviously Campbell, that our vendors use, and sometimes it's hard to get a straight answer from a broker, or sometimes they have to loop in their legal team. And I'm just wondering if there's a set way to verify something like that.
Yeah, there really isn't. I mean, I can tell you that the most The most popular program that's not admitted that is used by vendors is the FLIP program, FLIP. It's not admitted. I'm not saying that not admitted is bad. It's I guess the reason why it's more of a concern than anything else is that we've had some experience with this. There was a company out there about 5 years ago, 6 years ago, called Farmers Market Insure Now, and they were not admitted, and they were an online service. You could go on as a market or as a vendor, and you could buy an insurance policy online. You pay for it online. The system instantly, generated an insurance certificate and emailed it to you. And one day, they just shut down their phone number. I mean, it was just disconnected, and they just disappeared. And came to find out that they were collecting a bunch of insurance premiums from folks, but weren't actually sending the money to the insurance company. So there was a bunch of certificates that were generated. It was insurance fraud. It was an issue, but so claims, weren't paid. If it's admitted, it's gone through the scrutiny of the state, and it's guaranteed by the state that kind of thing won't happen. And so there's recourse in the event that somebody just goes belly up. But it's other than asking, hey, this has to be on admitted insurance paper. You can't. There's really no streamlined way to know, list of admitted insurance, products. But that's I'm not, again, that's an isolated incident. Unfortunately, it did affect the farmers market community, but that's not the norm. That's not the actual thing that happens all the time. There's a company that we actually recommend that is not admitted. There's a company out there called theeventhelper.com, and what makes them different than other insurance products like for vendors is they provide one-day policies. So you could, as a vendor, where you could buy a two-day policy. You go in and you select the specific dates that you want insurance coverage for, and it would cover you for that day, or for this Saturday and then another Saturday in July. You could pick the dates that you want the insurance coverage to be in place, and so they're not affiliated with us. They're not admitted, but we use them or recommend them as a resource for those vendors that might just want to come to your market and try it for a day. But, they don't want to pay $275 for an annual insurance policy that is going to cover them for a whole year. So they, spend $80 and they go buy a policy just for the day, just to see. So they're not admitted, but I guess we kind of look at it as, what's the chance of the company going belly up the day that that insurance is good for? So anyway, excess and surplus lines insurance generally will charge. There's a tax that you have to pay as a non-admitted product that the insured has to pay in order to actually even buy it. The state charges a tax to even offer that kind of product. But yeah, so I apologize. I wish I had a better answer for you there.
No, not at all. All of that was still very, very useful. Thank you.
Yeah.
We have a question in the chat from John that says, is it necessary to have the Accord form for the COI, or would other forms suffice that indicate similar information?
Okay, so the Accord 25 is a standardized form that's used nationally. It was adopted by all of the insurance companies, the National Association of Insurance Commissioners. So the insurance commissioners for every state has specified that that Accord 25 form is what is used by every insurance company. So it's standardized. It makes it much easier for you if you require an Accord 25 form, because you're, regardless of the insurance company, all the information is in the exact same places and it's formatted properly. So you're able to quickly look at an insurance certificate and determine its validity because they're using a standardized form. So it's preferred that you get that certificate of insurance from the insured on an Accord 25. It's not in any way, shape, or form mandatory. It's just preferred. If somebody provides you with the actual insurance policy itself and the insurance policy endorsements and that sort of thing, that state that the policy is in effect and so forth, and it says that you're an additional insured on those endorsements in the policy, that is okay, except for the situation where being a certificate holder allows you to get notified in the event that that policy is canceled the following day or midterm or that sort of thing, or a month from now. If you're just provided a copy of the insured's copy of their insurance policy, that's not going to help you in the event that they call their agent the next day and cancel the policy. You're sitting there with a policy that looks like it's okay, but there's no notification process to let you know without that Accord document that the policy is no longer in force. So it's really best practice to get that Accord 25, so you have that backup to be notified in the event that the policy has been modified or canceled in some way. That would be my best advice to you.
Okay, do we have any other questions? I see Andrea has her hand raised.
Hello and good afternoon. Thank you so much for this information. It was really valuable. My question is pertaining to organizations that may not have a certificate of insurance yet, as they're newly developing. So my question would be, what is your advice pertaining to organizations such as these?
Okay, so I get that. It's a great question. I get that question come up quite often from vendors and so forth that are seeking insurance, and they're in the process of setting up an LLC or a corporation or something along those lines. When that kind of thing occurs, the insurance, a sole proprietor can buy an insurance policy. They don't have to be an LLC. They don't have to be a corporation in order to get a commercial insurance policy. It can be an individual that buys a policy and they're just a sole proprietor operating under a fictitious business name. So in that particular case, this is a roundabout to get to your question. But in that particular case, Bob Smith can buy a policy for Bob's Famous Potatoes, but he doesn't have an LLC. He's not a corporation. So he'll buy a policy, and in that named insured block up top, it would say his name, Bob Smith, and then the 3 letters DBA, which stands for doing business as Bob's Famous Potatoes. So Bob is just a sole proprietor. He's just an individual. He's a hobbyist. He's doing this kind of thing. So he buys a policy under his name and covers that that fictitious name as well as a DBA. Okay. So when you have a situation like what you're speaking of, somebody needs to take responsibility for that organization. If they're not formed yet, somebody's going to have to step up and say, okay, I'm going to be the responsible party until we get this LLC established or the corporation formed. And so they would buy the policy under their name individually and then put DBA, whatever that entity name is going to be or hope to be in the future. I always explain to folks that are wanting to do that responsible party has a risk individually. So until that LLC is formed or that corporation is formed, that individual that is accepting responsibility and buying the policy under their name with a DBA, the drawback to doing this as a sole proprietor is that if the policy limit is breached, say you have $1 million policy and worst case scenario, canopy blows away and permanently injures someone, and a judge or jury awards $1.5 million and there's a $1 million policy limit, the insurance company will pay out the $1 million policy limit and then they'll come after that individual for the difference. They'll come take their house, everything they ever hoped to make for the rest of their life. It's going to be garnished. So, you know, I'm not trying to be the, you know, gloom and doom here, but there is a risk there when you're operating as a sole proprietor that you could have that carry over into your personal life. So when somebody agrees to accept that responsibility, they do have some inherent personal risk that goes along with that. But that's how you would handle that, is to have them purchase the policy as a sole proprietor, and you would want to have the space least the person that is the responsible person that has their name individually as the insured would be the one that would sign off on the vendor space.
Thank you very much.
All right. I think that is about our time today. I wanted to thank Larry for coming, and thank you all for coming and, you know, attending our meeting. Next month's meeting is July 26th. We'll be discussing cannabis at farmers markets. The session will be led by Cecilia Oyederan from Foley Hog Law Firm, a renowned expert on cannabis law. So please join us then. If you have any other questions, feel free to give us an email or contact Larry.
Can I interject something real quick?
Thank you very much. Yeah.
Okay, just wanted to interject something real quick.
Yeah.
One of the questions that had come up was, you know, are there things that vendors are doing or offering or selling or activities that they're doing that you should not have involved in the market? That's up to you if you want to have them there. Again, if they're going to offer, you know, CBD or cannabis or a petting zoo, or they're going to set up a bouncy house, as long as they have insurance for that activity and cover themselves. If they have liquor liability because they're selling alcohol or manufacturing alcohol, you can have those folks at your market, just as long as they have insurance and list you as an additional insured. So just wanted to make sure, you know, when it came to those kinds of iffy things, that, you know, hey, it's okay if you want to have them there, as long as they have insurance, list you as an additional insured, you're good to go. Sorry, when you said cannabis, I just wanted to throw that out there, because you can get insurance as somebody that's a dispensary or a grower.
Yeah, no problem. Yeah, any other questions? Feel free to contact us, and thank you guys for coming today.
All right. Have a great day. Thanks, guys. Bye-bye.
Have a good one.